Alright, good morning everybody. Welcome back to another stream. So today's Wednesday, July 23rd, 2025. And we're stuck in the consolidation. Some would say even a type 3 dealing range. So what do you do? Trading for those extreme highs and extreme lows. That's what I think we're gonna be doing. So we have this extreme dealing range from this low to this high. Ideally, I would like to see higher prices going up further to make higher highs. There's no SMT up here. There's no SMT. Everything's working just how it should be, right? Markets are correlated, positively correlated. These highs have been just going to make higher highs. So if that's the case, my long-term bias is still bullish. Coming back down, right? Even with this big candle, still bullish. Why? Because there has been no crack. There has been no crack in the lows. Everything's been just going just fine. But what do you do when price starts doing something like this? See, one of the challenges I've been having since I started like trading was always which high, which low, which fair value gap, which to refer to and when. That's always been my struggle, and it still kind of is. When price does this, I get thrown off a bit by it because there's nothing here to really support the idea that it can either take buy side or sell side. It can take both because there has been no form of support in the form of a crack and correlation. Now, as I mentioned before, ideally, I would have liked to see higher prices. So any lows referred back to on this leg from this low to this high, this whole leg in its entirety, I would refer back to any lows that were left behind, that were not, that were left behind, because there's unfinished business, and there's a lot of liquidity lows that are considered unfinished. As a matter of fact, if I show you, these are all the lows that I'm looking at right now, that are looking very, very suspect. There's a lot of them stacked up here. I leave them out for marking is because, again, this is going to be my clean chart. So if I predict it's going to keep going down lower for the purpose of gardening more buy stops, right? More sell side liquidity. Smart money will be using to accumulate more positions of a long, and then using that to take price going higher. But in the meantime, what do I do? So since there has been no crack correlation, every low that's being formed here, I'm not trusting that low. I'm seeing that as like a future run on stops, future run stops. Okay, until I see that mini sell side delivery program begin, that's where I would want to take a short. In the meantime, if the purpose is to take some buy side liquidity, my miniature bias is that I want to see prices keep going, printing higher at this time. And look at how it's been going, right? Really, really choppy. Some high resistance that we're dealing with right now. These London lunch highs were also interesting to me because they were not referred to in NQ, but in the US 500 they were referred to that. See that SMT? I still see that like in the future we're gonna pierce through this because it was already reacted off from the opposing positively correlated instrument. So this is the CFD market. Remember, CFDs. I go into futures to do my actual markings, but CFDs I use it for my real-time price action data. So, and down lower, see that's what I mean. All lows will just get pierced through it, especially when you have something like this, a mitigation dealing range. So normally this green box right here, I would refer to it as OTE, right? When they're stacked together. When my balanced price ranges are being stacked together, not how it is now, but in other times, when they're being stacked together, I would refer to this high or this low as my OT. But when it's not stacked, and it's separated. The 60U especially, the high is suspect for turtle soup. Where's the open float? Right now the open float is from this low to this high. So I'm interested also in seeing how will we be reacting off the midnight sell side liquidity. This was also very interesting to me. This London low. So this London sell side liquidity low to high, but and US 100 had a high appears to that low. So if I want to see higher prices, I would have liked to have seen this leg be used as support to keep going higher, but only if we are inside a really good higher time frame buy side delivery program or a buy program. That's what it is. Just my tongue just wants to speak. I don't know why I keep saying such a big name. A buy program, which we are in this big buy program essentially, but we're not behind this leg. I would be referring back to these lows for an SMT cracking correlation to take it up going higher. What about this leg? I call this a phantom leg of a phantom leg, right? Because usually this would be my phantom leg from this high to this low. As it's going down there and acquiring more sell stops, sell side liquidity, I'm looking for that divergence to take effect. But if it doesn't and it starts rallying up again like this is my second phantom leg, in that now I'm referring back to whatever the previous leg left in terms of highs to create a sell program in the future. And as it's creating lows, this B phantom leg, I'm not trusting those lows to be acting as support. Because if this abundant sell side liquidity acted as support, I would have been able to trust this anchor, right? So cross 25%, keep going up higher. But look at how we're behaving now. Will you still be trusting that 25% level to act as a bullish signal? Now we're looking at this midnight sell side liquidity pool and wants to stop that from being acting as support. Right? This low is inside two phantom legs, of which neither of them have a decisive choice of where we want to take price to. So that's why things are a little risky at this time for me. And it's why I'm kind of weary in taking trades right now. But I still am aiming for that AM buy session high. Everything's pointing towards it being swept down to the sell side. So now I'm wondering, are we gonna go dip down to midnight sell side liquidity? Right, we have a nice turtle soup from this high, and now we're creating dealing ranges to head down there. Now remember, we made a new lower low right after 8:30. So being that this is the B leg of this dealing range from this high to low, we could retrace just back up to 75%, which is the midpoint from equilibrium to this low, and continue lower. Also equilibrium, and then retrace lower. But seeing how we've been reacting with speed, right? I do think we're probably just gonna see a reaction of the 75%, so like where it is right now, and then just shoot lower down to midnight sell side liquidity. Low probability today. I'm seeing reasons for it to go both down and up. Is that something you want to be involved in? Right now we're seeing hints that it might hit down to midnight sell side liquidity pool. I was mentioning earlier in the stream that I would prefer for it to go up higher first before it continued to get down lower. But seeing how we've been reacting off SMT here, right? The highs that were used on US 500 were not used on US 100 or NQ. Let's see that. Yeah, no, you see how they were used. And now No lows here could be trusted to act as support or anything that I can use to anchor my fibs from. I wouldn't trust this signal at all. Yes, we closed about 25%. Yes, we had SMT in the lows, but higher time frame wise, we're stuck in this big consolidation right now. Ever since we had the second phantom leg occur. First phantom leg from this high to this low, and now from this low as we're printing up higher prices is a second phantom leg. I'm not trusting the lows at all that is printing here. Looking for the highs to be reactive from. Oh, look at this. So what did we say? Before 9 o'clock, hit the midnight sell side liquidity. Okay. And now it's going to be 8:45. And still, see, like, this is what I mean. This is why I'm trying to steer away from very short-term scalps because it's like constant exposure to risk, you know? Like, this wouldn't be making me feel good right now. I'll be feeling super anxious, trying to make sure that this has to work, the street has to work. And things of that nature. Now, looking at this chart, I should have been stopped out already, right? I have my take profit down here. That's the kind of trap that upsets me. Look at that. You should have been taken out already, but you're still somehow in the trade. What the heck? How do you let's see here. There you go.